Hello and welcome to InvestorToday.ca. InvestorToday.ca is brought to you in conjunction with RBL Communications, your online IR professionals. It is Thursday, the 27th of September, and we're coming to you live from the Toronto Resource Investment Conference. I'm here with David Urban. David Urban is the True Contrarian. You can check out his website at TrueContrarian.com, I believe, isn't it, Dave?
Yes, that's correct.
Great to see you. You know, it's been, I think New York was the last time we were able to get together.
That's correct. It was New York at the New York Hard Asset Show. We met up there and made it through the summer months, the dry period, and now it looks as though the ice is thawing in the junior market, especially in the financing area, and the gold price and silver prices have broken out of the doldrums. They've broken higher out of resistance, and things are beginning to brighten up and looking better every day.
Well, and this show is going particularly well as well. I've got to say, I want to thank the folks here at the Cambridge House for providing this venue here at the Sheraton Hotel in Toronto. We've had some really well-attended booths, and I know that there are a lot of juniors here on the floor that are getting some pretty significant interest from companies like Barrick.
Oh, definitely. I think that they are sniffing around. They had to make a little bit of a change in terms of looking at returns over production, and they've kind of shifted gears a little bit, but I think Barrick is really on the right track, and this show is highlighting a lot of the quality companies that are down in the junior sector right now. And if you're an investor and you're looking at the junior sector or you're considering it, you can start to see money flowing into the quality companies, the higher quality deposits, those that are coming up with very good drill results in very attractive locations worldwide.
That's true, and it's all about jurisdiction and neighborhoods, isn't it?
Definitely. You know, it's like when you're living it's like when you go to choose your first home, you want to choose a home in a very good neighborhood, and that's what we're seeing now in the junior sector. Projects that are in very good neighborhoods are getting much more attention, and they're getting higher quality attention than those in less attractive areas like Argentina, where they're experiencing inflation of over 20%.
That's right. Well, you know, we've got a couple of companies. I've spoken to a number of juniors. A couple of them are actually in production. One company I spoke to today actually went into production today, and they're down in Mexico. And again, these are small cap. These are companies that were trading, you know, in the 15 cent. One company I was speaking to, I don't want to get specific with names of companies, but I mean, they've gone from 10 cents to 26 cents, and they've just gone into production. So, I mean, the future is obviously blue sky for those folks.
Oh, definitely. I mean, for the last year, it's really been a difficult slog if you've been in the junior area or you're developing your project, because share prices have been depressed with gold and silver coming off 20%. It's been a very rough market, and when you go, I think at New York Hard Assets and even earlier at PDAC to a lesser extent, you saw a lot of the juniors. There was a little bit of concern because the financing markets had pretty much dried up. But what we're seeing here at Toronto Resource Investment Conference, Cambridge House, is we're seeing that the financing markets are beginning to the ice is beginning to thaw, and quality projects are getting funding. We've seen that over the last couple of months, and I think that's going to continue into the future.
So again, positive growth. That's what we're seeing here on the ground at the Toronto Resource Investment Conference. And it's all about the juniors really starting to get out of, almost like they were in a cocoon and we're waiting for the butterfly to emerge.
Right, exactly. And in a lot of cases, share prices have been very depressed over the past year. A lot of companies' share prices down 40, 50, 60%, even though they have quality deposits. And they may have a bankable 43-101. They may have a bankable feasibility study. They may be building out the deposit, like the company you said just entered gold production today. But share prices are depressed because the market has really been taking a wait-and-see attitude. They've been saying, show me the results before, we commit any capital. And I think now that we're seeing the market start to sort of de-ice, or I say the spring is coming, we're seeing a lot more interest, and I think that's eventually going to filter down into the share prices of a lot of junior mining companies.
Well, and it's definitely time to buy for a great number of these companies. A lot of companies have saw themselves bottom out under this incredible downturn that we were at, but now the juniors are coming back to life. Now, do you think that has anything to do with the fact that the major markets are starting to pull themselves together and folks are looking for a little more high risk?
I think so to an extent, but I think what it's really come down to is the valuations. When you look at some of the companies that are down in the junior sector that are looking to build out their deposits, their drill results, I mean they're selling at just tremendous discounts, and they've been in this doldrums now for like 3 to 4 years. Mm-hmm. I mean, and it's just it almost boggles your mind when you look at the valuations in terms of. I mean, I know of a gold exploration firm in South America that is selling to a 90% discount to the takeout price of Extor Gold, and it boggles my mind because they have a resource in the ground that's 4 times the size of Extor's, and I shake my head because I realize that if the share price is just far too low.
Right. No, is part of that not an inability, if you will, to get their story out and maybe get the story clearly delineated so that investors know? Or is another aspect of the problem the fact that, we in Canada know about the resource market. That's what we know about. But, American investors really are sort of new to the resource investing market, aren't they?
Oh, they are. And in America, I mean, it's been a very difficult time in America because despite the high price of the stock markets in the U.S.
Right.
and the rising price now of gold and silver, a lot of people, they're scared to put their money to work in the U.S.
Right.
They're afraid with the election. They don't know what's going to happen in the coming months. I mean, GDP just got knocked down today as we're speaking from 2% with the first print to 1.3%. Durable goods orders fell off a cliff down somewhere in the low teens. Investors really are scared out there because they're seeing on one hand that stock prices are rising, but on the other hand they see that the economic news that's coming out isn't the best in the world.
Right. Well, I read a report recently that said in the United States, and it's a rarity for any country, but 70% of their GDP comes from consumer spending. And they're just not spending right now, are they, David?
No, they're not. They're not. Retail sales have flattened out. I mean, we've seen a small tick up with back-to-school sales, but before that, we had 3 down months in a row. Mm-hmm. And, we've seen a little bit of a bottoming in the U.S. economy. And, it's just been a difficult time. And in the U.S., investors are really afraid to put their money to work. And even though they say that it's, quote, risk on or risk off, especially when you get down into the junior sector, investors are afraid to put their money to work in this sector. And I think that's contributed to the low prices for the juniors. But if you're a patient investor and you're a long-term investor and you have a company that's got good drill results, has a bankable feasibility study, has a good 43-101, just hang in there because, share prices will come back. I put some money into a junior last year at 80 cents, fell down to 60 cents, but they continue to put out good drill results, and now that stock price is up to $1.
So there you go.
It's about patience, mm-hmm. and that's one thing that investors look for. You want to have that 10-bagger, you want to have that 20-bagger, but those things don't come overnight. They come from doing your homework, from being a patient investor, from being in a junior for 3 to 5 years, from following that company through, getting to know management, shaking hands, talking to them, to understanding drill results that are coming out, to make sure they're following through on their management plan and they're building towards their 43-101, they're building towards their bankable feasibility study.
Absolutely. Now, are there any companies that you can name that you're looking at, David? Any companies that you're watching in particular? We're going to give you a couple of minutes, I guess, to just talk about that.
Well, I think the one stock that, I hold that, I mentioned earlier with the share price was Balmoral Resources. They've got very attractive land holding package in northern Quebec, which is... it's just to the east of the Detour Gold Mine, mm-hmm. and they've put that together in the last couple of years. They've been drilling the property out. They've had good results. They've had one very good result that came out earlier this year. But I think that like I said, I sat with that stock. I watched it go from 80, watched it go down to the 60s. Now it's back up. It's almost $1. It's like 98, 99 cents, and I think that's a quality junior. I've owned it. I've spoken with management. I've talked with them. I followed the drill results, and it's something where you have to be patient. I know that right now with my holdings, I'm up 20%. Yeah, at one point I was down 20%. but I was patient about it. And that's something to remember about the junior sector if you're a small investor. You know, do your homework, and be a patient investor, because you will go through these times when gold price falls and their share prices fall.
Hello, I've been talking to David Urban, who is the True Contrarian. We're coming to you live from the Toronto Resource Investment Conference. I'm Dave Clever. The website for David Urban, by the way, www.atruecontrarian.com. I want to thank you, David, once again. Thank you for tuning in, viewers. We'll see you next time here at InvestorToday.ca.